Please do subscribe, like, share and do not forget to comment. Enjoy the video now.
Today I am going to analyze the most stable and precious asset from ages, and that is gold. Gold is a precious metal that has been valued for its rarity, beauty, and durability for thousands of years. It has been used as currency, jewelry, and a store of value throughout history. Gold is a chemical element with the symbol O and atomic number 79, and it is one of the least reactive chemical elements, making it resistant to corrosion and tarnishing. Because of its scarcity, it is often viewed as a safe haven asset and a hedge against inflation, economic uncertainty, and geopolitical risks. Gold is also used in various industrial applications, including electronics, aerospace, and medical devices. The price of gold is determined by supply and demand factors, as well as global economic and political conditions. While gold can offer diversification and potential benefits to a well-balanced investment portfolio, it is important to carefully consider the risks and volatility associated with investing in this precious metal. Let's analyze how gold is going to perform in the coming days. Gold is presently trading at $1,865, and just touched $1,950 on 2 February 2023, last high was on 8 March 2022, when it has seen an all-time high of $2,065, before this on 7 August 2020 gold tested a high of $2,070. So this is the third attempt of gold to test this level of 2050s. I am sure that this time it will break this level. From here, since it is going to be a lifetime high, it is difficult to predict where this rally will end, but as per my analysis, gold is all set to set a new all-time high of $3,000 by December 2023. To prove this, I will share on my screen the last 100 years gold price movement, and will show how in the last 50 years gold prices is growing exponentially due to inflation and excess fiat supply in the global economy infused as a steroid by Feds. You will see a clear pattern in the gold price in last 100 years that before 1970 gold rates were pretty stable and were growing very steady pace, but after the 1970s there has been pattern of growing 4 times every 5 years. So to understand this, just see the screen where I am showing you this pattern. In 1970 gold was trading at $38.90. In 1975 it had grown to $139.29, which is almost 4 times of 1970's price of gold. Thereafter from 1975 to 1980, from $139.29, it shot up to $594.90, but after that, the price of gold did not grow significantly from 1980 to 2008 due to a variety of economic and market factors. In the early 1980s, the United States Federal Reserve raised interest rates to combat high inflation, which led to a stronger U.S. dollar. A stronger U.S. dollar made gold, which is priced in dollars, more expensive for foreign buyers, which reduced demand and put downward pressure on the price of gold. Additionally, during this period, the global economy was relatively stable, and there were no major geopolitical events that caused a surge in demand for gold as a safe haven asset. In the late 1990s, the dot-com boom and subsequent stock market bubble created a strong investor appetite for high-risk, high-reward investments, which took attention away from gold. Thereafter, major event of the Lehman Brothers bankruptcy, there was global turmoil in financial markets, after which gold shot up after the 2008 economic crash for several reasons. The financial crisis caused a wave of uncertainty and instability in global financial markets, leading investors to seek safe haven assets like gold. This surge in demand for gold as a store of value drove up its price. Additionally, in response to the crisis, many central banks around the world engaged in quantitative easing programs and lowered interest rates to stimulate economic growth. These policies led to increased inflation expectations, which further fueled demand for gold as a hedge against inflation. Furthermore, the crisis resulted in a decline in the value of the US dollar, which is the currency in which gold is priced. As the US dollar weakened, the price of gold increased as it became cheaper for foreign buyers. All these factors contributed to a surge in demand for gold and a sharp increase in its worth following the 2008 economic crash. In 2005 gold was at $513, it went to $1,420 in 2010, and in 2020 gold reached its all-time high of 2058. This year 2023 it is trying for the third time to break the $2050 mark, and due to the Russia-Ukraine war, global food shortages, and global economic slowdown, made gold investment the most secure investment. In the last 2 years BRICS nations have purchased a massive amount of gold reserves, in the range of 1700 to 1850. There was traditionally three main asset class, were funds used to move in case of uncertainty in property, equity, or gold, and take shelter under the dollar's value, but in the last 10 years after the introduction of cryptocurrency, a fourth option has been emerged for global investors, in the form of crypto, which has weakened the power of the dollar, due to its convenience of transactions and storage. This new asset has changed the equation and has increased gold demand over a dollar. This is the reason why I am of the opinion that gold is going to shine brighter in the coming 2 to 3 years. By 2024 gold is going to cross 2,500 and by 2025 expected to break 3,000. This analysis is just for information and education purposes and is not financial advice. This is my own technical analysis based on my own research, so I strongly recommend trading only with your own research after consulting your financial advisor. Sujit Jadhav does not take any responsibility of predictions made in this video. I hope you have enjoyed this video, and take the note of date and time of prediction, as I make predictions at least 6 months to 1 year before time, so viewers can later analyze the predictions made. If you need me to analyze any commodity, crypto, or equity, please write it in a comment. I shall try my best to make a video on the same. Have a good and prosperous day ahead. Do not forget to subscribe to my channel, comment, like, and share this video. Thank you.